Hey guys, welcome back to the channel. We are seeing a really turbulent time in the stock markets recently, and now we are seeing Donald Trump coming out with a exception for tech goods, right? The question is, will this cause markets to rise, or are we well and truly into what could be an upcoming recession and market crash? Well, it's really interesting this because the last couple of weeks have seen markets basically being a roller coaster, absolute massive rises and dips, really in very short periods of time. And of course, this relates to Donald Trump's policies. One person that doesn't seem to think that markets are likely to rebound appears to be Larry Fink, the CEO of BlackRock, the world's largest asset manager. And he warns of another 20% crash potentially in markets. This is really quite significant now because we're hearing a lot of people coming out and saying stuff like this. So, most CEOs I talk to would probably say we're in a recession right now. This is what Fink stated in the Economic Club of New York on Monday, according to a Reuters report. He indicated that share prices might experience an additional 20% decline as substantial US tariffs cause investors to worry about the US economy contracting. Nevertheless, the CEO of the world's largest asset management firm maintained the share market's decline following Wednesday's tariff announcement presented a favourable long-term investment prospect rather than a reason to sell, and did not present any systemic dangers. So this is really quite interesting because if we just look back to what we saw a couple of months ago, a lot of investors were already thinking that markets were overvalued, and that's before anything to do with Trump. Now, here is a specific article that we've looked at in the past, and this was before any of the tariff stuff really took effect. But this is a time where we were seeing market prices and people's opinions as to what things are at being very, very far apart, with nearly 90% of fund managers saying that US stocks are overvalued. Now, this was in February, like I say, and this was the largest number since 2001. So, a record number of fund managers see US stocks as being overvalued, overpriced, according to a Bank of America's February Fund Manager Survey. This includes 205 panelists managing $482 billion in assets, and they found that 89% believe that US stocks are overvalued, the highest level since 2001. Now, this is where things become particularly interesting, because if you guys remember what we saw recently, we were at a time where stocks were at all-time highs. We're at a time where a lot of people already thought that comparative to the way the economy really was in real terms, stock prices were very far removed from that, and a lot of people therefore were questioning really what was going on in the markets as a whole. Bring into that this tariff question, and things become even more difficult, even more challenging. Will markets rebound, or was a crash here a long time ago? It's very difficult to say, but the survey showed that 73% of investors now view it as the most crowded trade, down from 80% in January. And this is quite interesting to see, right? A lot of people think that the markets essentially had peaked quite a while ago, but with all of this tariff news, it really changes the game. And as the markets have reacted in the last couple of weeks, it really makes things a lot more unpredictable. It's really difficult to say where we're going to go in the markets this week, guys, but this is a reality of the situation. And this is the sort of thing that I don't see that many people speaking about at the minute, but it is the truth. There are a few signs to be aware of, and there are a few things to pay attention to this upcoming week. Stay safe out there, guys, and thank you for watching. I hope I'll see you soon.